Morning. Thank you all for being here. We're going to go ahead and get started. I'm excited for this panel. This is one that really has me fired up. Just for the record, it's fraud prevention. So if anybody didn't catch that prevention part, we're going to hear a little bit about what some in the industry are doing and other industries to prevent fraud. I find it fascinating. In the insurance industry, I think a lot of what we hear we can apply. I'm not going to take much more time. Brian Millman is going to start. He's from MIB. Jeff Muschick is from Briterian, a MasterCard company. I'm going to let them introduce themselves, give a little bit of their information about their company and their bio, so I'm just going to get out of the way and let Brian get right to it.
Thank you, sir. I'm good? All right. Good morning, everyone. All right, I am Brian Millman. I've been with MIB for 25 years, and I love fraud. So fraud keeps me busy. Fraud allows my company to stay in business, and it gives me opportunities like this. So big fan of fraud. In spite of the fact this is fraud prevention, I do love fraud. So I'm going to move pretty quickly. I've got a lot of content and I might skip over some information just to give Jeff a chance. We're going to approach fraud from two very different perspectives. I'm going to be focusing on what we're doing in the life insurance space. Very much North American fraud and life insurance. Jeff's got a much more global perspective on things and a lot more technology around the fraud happening in his space. All right, so I'll get moving. So I'm not going to assume everyone knows MIB. So MIB is an industry-owned organization. So there's about 400 life and health insurance companies that are our client companies, but also our owners. So we're in a kind of a unique position in the industry. Our core mission is to detect and deter fraud that's in the application workflow process. So beyond that core business, we also do mortality studies with the Society of Actuaries, et cetera. So that is what MIB does. How many have the Waze app on their phone? Waze, most of you have Waze, so it's a great app. It's one of the coolest apps around there. So Waze and MIB are very much in sync, right? So Waze is an app, it gives you directions, that's great. It can get you from point A to point B. But at the same time, when using Waze, you can indicate that there's a car on the side of the road in the shoulder. There's a police set up. So with user input, you're also able to leverage the app and use that collaboration. So MIB is very much the same thing. So an underwriter, underwriting the next applicant, uncovers certain bits of information that affect their mortality. As part of an MIB member company, that underwriter submits that information to our database, then shares it with other companies. So very much like the Waze app, user input allows you to see that there's a police about to pull you over. MIB allows you to underwrite and not incur the fraud on applications, right? Makes sense? So MIB is the Waze, or actually Waze, we're first, right? So we've been around since 1902. So Waze is really the MIB of directional apps, right? All right, so if you think about the way life insurance was issued back in 2000, just for a stake in the ground, it was an insurance agent sitting across the table with you and your loved ones, and that's how it was placed. If you look at the way things are going today, it's going to change. A lot of money is being invested in technology. There's was it $2.5 billion in U.S. life insurance startup deals last year. It's a huge investment in money. That's going to change the way we do things, the way we do business. It has to. So I'm going to talk a little bit about the way we do things now and the fraud issues, and a little bit about the way we see technology going. All right, so I saw Donald Cressey wrote this in 1953. He looked at fraud and created this pyramid of what's in play for fraud to occur. So it's opportunity, pressure, and rationalization for an applicant in order to commit fraud. So if we break these apart, is there pressure on an individual? So financial is a big motivator, big pressure point. So the Coalition Against Insurance Fraud had a survey, and they indicated that people are more likely to commit fraud in an economic downturn. So that is your financial pressure to allow for fraud. Second is their opportunity. So our workflow has chinks in the armor, so fraud is definitely opportunistic. And again, that coalition survey says that people are likely to commit fraud, mostly because they think they can get away with it, which is largely true. And the third piece of that three-legged stool is rationalization. Can people rationalize committing fraud in order to make it happen? And again, that survey showed that poor service would allow for people to commit fraud. Interesting. And also, individuals think that by cheating an insurance company, they didn't hurt anyone, right? We're billion-dollar organizations, and what's one little application fraud? This is a lot of words in this slide, but really it's the FBI's website, and they're looking at fraud in general, and they're saying the insurance industry across multiple lines, it's $1 trillion in premium, annual premium, and they're submitting that much premium creates a huge opportunity for fraud. So because there's so much money involved, fraud will follow. And the cost of fraud they're citing is a $40 billion per year issue. So there's a lot of money hanging out there in the balance. These are very difficult numbers to prove, especially fraud. So much of it goes undetected that it's difficult to quantify. So we talk about fraud. There's a lot of different, I'm not going to go over all of these, but churning and stacking of policies. Foreign travelers have elaborate fraud schemes. The sexy ones are murder and faking your death, things of that nature. Where MIB plays mostly is that misrepresentation. It's that individual that applies smoker at a company and realizes their premium's a lot more than what they want to pay. They go to the next company and don't admit to being a smoker. So you're misclassifying a risk from preferred to a standard, and it's those death by 1,000 paper cuts, right? Those small pieces of fraud that add up and make a dramatic impact on the industry. So if you look at this is a coalition survey that they asked the SIU units within companies, what areas of fraud are you most concerned about on a severity scale? And fake death is up there, but they think underwriting fraud is more significant, more severe. So it goes to show you that it's appreciated that application fraud, and those death by 1,000 cuts really add up, and that's the concern for a lot of companies. All right, so I read this book a while back called Playing Dead. This woman, Elizabeth Greenwood, wrote this. And so I'll tell you a quick story around it. It was very interesting. So she incurred a significant amount of college debt, and she's fretting about how she's going to pay it back, how it's going to take so long before she can really get ahead in life. So her friend says, yeah, you should fake your death, and collect that insurance premium or death benefit. So she starts thinking about it and says, I'm going to actually pursue this. So she, much like I did a Google search, and there's 2 million plus hits if you type in fake your own death. And there's how-to guides, there's manuals, there's success stories, there's fail stories. It's actually amazing. So she starts pursuing this, and I won't go into all the details, but ultimately she goes down to the Philippines, buys her own death certificate with her name on it, and can commit insurance fraud. She has all the tools in place. She doesn't, she publishes a book and offsets the debt that way. But it was pretty interesting. So one story that she shared in this book that I'll share with you is I found fascinating. It's a gentleman, you can Google this guy, his name's Donald, it'll come to me. The name will come to me in a second, right? But he's buying up property. He's a blue-collar individual, buys up property. He's about 15 pieces of property in England. And one of his property deals goes south. And he realizes that he might lose all of his property, so he's going to do this insurance fraud scheme. So he gets in a kayak. He and his wife knows about the scheme, gets in a kayak, paddles out early morning, jumps out, leaves a trail so people can see that it was him, makes his way to shore, goes to northern England, about a 5-hour drive from where he lived, lives in a campground, loses about 80 pounds, grows a long white beard, and uses a cane. So now he's kind of altered his look and feel. After about 5 months, he goes back to his town where he grew up, where he's got all his properties, and no one recognizes him at all. His wife doesn't recognize him. So he ends up moving into one of his own properties and becomes the handyman for his 15 properties, living next door to his wife. And he does this for about 5 years, ends up doing pretty well for himself, and decides to turn himself in, give the money back, figuring, well, if I give the money back, no harm, no foul, which isn't actually true. You do go to jail, as did he and his wife. But it's a pretty fascinating story, and the name hasn't come to me yet, but it will. So we all remember the 9/11 tragedies. So there are about 6,000 missing person reports within a few days of that tragic event. And we know now that about 2,000 people actually died in the Twin Towers. There were 44 individuals that were caught filing false death claims. So if you look at those numbers, there's about roughly 4,000 people that were submitted as missing persons that ultimately weren't deceased. So not all of those were fraud, obviously, but you have to imagine some percent of those are fraud. So really the point is that the fraudsters are opportunistic. Another interesting stat is in 2010, there were 132,000 instances where consumers, law enforcement, companies submitted to a state fraud bureau likelihood of a fraud event. But there were only 45,000 cases that were opened up to investigate. 4,200 arrests and 2,000 civil suits. So 6,200 actions were taken on 45,000 cases that were opened, on 132,000 suspected cases. So a huge discrepancy there. It's really not a knock on the fraud bureaus. It's really a complicated thing to investigate. If it's a foreign death claim, do you really want to send someone to Nigeria to investigate the death certificate? It's expensive, it's costly. So a lot of companies will just pay the claim because the legal fees, the expenses, it's significant, and it's significant for a state insurance fraud unit to investigate as well. So it's an interesting problem where the fraudsters know that the likelihood of getting away with it is pretty high as long as you know some of these thresholds. This is very difficult to read, but the top in the red bars, this is an RGA survey of carriers as to what tools they're using for application fraud. So a lot of the red bars up top are data products. MIBs has a few data products that companies are using to try to uncover the fraud on the front end, as opposed to trying to unwind it on the back end. The darker bars on the bottom is what they're using for agent fraud. So agent fraud is a lot less sophistication, a lot of it's training and things of that nature, whereas the tools for underwriting are much more data-driven, real-time fraud prevention tools. One other point around the fraud bureaus is the survey questioned insurance carriers as to how satisfied they are that the fraud bureau accepted their cases. So just over half said that it was good. If you flip that, almost half said that it was fair or poor service from the fraud bureaus, and excellent was an option as well that doesn't show up on the pie chart. So again, I'm not going to criticize the fraud bureaus. It's a very difficult problem, and it's very expensive. I mean, how many individuals are on a fraud unit and on a small state versus the number of claims that come in? All right, a quick MIB case study. So there's a scenario several years back. There was $43 million of insurance applied for by an individual. On our data stores, we had 26 different applications and multiple codes for overinsurance. So companies who are contributing to the database, they should alert you that there's a lot of activity on this individual for high policy amounts. So what we ultimately discovered through one of the companies that was investigating this was that the applicant was in an institution. His brother would get him out on weekends, and his brother had two insurance agents that were friends, and they were issuing large amounts of insurance on the institutionalized individual. So ultimately, because of the data we have, there was $14 million of pending insurance that was stopped, and the $29 million that was already issued was able to be rescinded. So not all our stories are quite that elaborate and sexy. Again, more it's usually that misrepresentation, the smaller fraud on overstating certain health conditions or understating. All right, so I'm going to skip past that. So, that's the way, those are some of the problems that exist today. But there's a lot of new technology coming out right now. So predictive models, artificial intelligence. We saw a lot of that in the InsurTech sessions yesterday, right before the general session. Some really cool technology out there. There's blockchain's been a buzzword for a few years now. Automated underwriting, trying to issue policies faster, fluid-free, as well as behavioral economics. Companies are hiring chief behavioral officers, changing the way they word the questions, which allows you to get better information and fewer misinformation. So this is the way the world seems to be going. We saw a lot of that in this morning's presentation as well. I also saw this article that fraud cases are expected to double with the rise of automation. So I don't think we can ignore some of those technologies. That's great stuff. Our companies have to embrace some of those front-end technologies. But are we creating more chinks in the armor? Are we creating more opportunities for fraud by doing that? I think it just doesn't mean we don't do it. I think it means we have to do it with our eyes wide open. These are some companies that have popped up in the news over the last year. These are great companies with some really cool technology. But again, are they thinking about fraud, or are they thinking about making things easier and faster? Probably easier and faster. That's what they do really, really well, and it's very impressive. I think it's our job to think about how are we creating more opportunities for fraud? And this is my last slide here is really, I don't expect you to read any of this, but this is how much venture capital is happening in the last year. There's a lot of money being invested in the industry, which means a lot of change, right? Dollars equal change. And what we saw from the FBI slide early was dollars also equals fraud. Fraud sees large volumes of dollars, and there's an opportunity there to find the chinks in the armor. So I'm going to hand it off to Jeff now, and he will speak much more specifically about some global issues in fraud.
Thank you, Brian.
You got it.
Here's your water, buddy. Hello, everybody. My name is Jeff Muschick. I'm responsible for business and channel development for our AI suite of services through MasterCard. What we're after on a daily basis is stopping bad guys. So people often forget what's going on at the root of the fraud that's out there. And what motivates me daily are a couple things. From a MasterCard perspective, money movement is obviously significant and an impact to the banks. But we do have the very short-term ability to reverse that in the ability that we see challenges and events and anomalies. What keeps me up at night are things like sex trade, human trafficking, drugs, guns, knives, furs, ammunition, and child pornography. That's what fraud is, their core business. That core business continues to prosper, and the event of simply, they view it as operating revenue. The operating revenue that they create with a fraudulent occurrence leads to money. They buy more pseudoephedrine, they make more crystal meth, and they make on average 81 to 1 on the dollar, which, since there's zero cost of goods, is 80 to 0. Fraud is a commission-based business. A couple of these numbers you're seeing across, if the print's too small, 506 million login credentials harvested in 2018. 20% of consumers use the same username and password on all accounts. 10 seconds it takes a basic algorithm to crack a password with 10 billion possible combinations. That's how I got into my kid's iPhone. $27 billion of card fraud estimated in 2017. So from that perspective, these are big, big numbers, and there's been some dents that have gone into this, these numbers as way as technologies, innovations, and as the last party to the EMV chip migration was the US that put a big damper in some of these numbers. From a day-to-day basis, I travel the globe, meeting with issuers of all shapes and sizes, merchants of all shapes and sizes, trying to stop fraud on both sides of the equation. In-store fraud is kind of an old thing now, but what's old is new again. These people are coming back. They've got mules, they're impersonating, they're coming back with synthetic identities. There's multiple derivatives thereof. That's a conference in and of itself, okay? They're coming back, approaching the branch with stolen credentials that they bought off the dark side. You can buy a stolen passport on the dark side for $60, completely passes through customs. Okay, driver's license for $18. This is why they're approaching the branches again with fictitious data, walking right in to get not just a credit card, debit card, et cetera. They're going to get auto loans, signature loans, et cetera. And now this has pushed us into a whole nother world of anti-money laundering, towels, terrorist alias watch lists. I spoke at a conference last week on counterterrorism financing, and that's a world where, well, let's just say we don't put our names on the screen, okay? So, but what we're gonna get into, a couple things here, is what's an emerged risk. These are kind of fraud jargon. The fraud language in the payment space has its own kind of lingo. That alone kind of makes you credible if you can understand half of what's on this page. But jackpotting, wiretapping, that middle blue, that's a thermal imaging camera, $79 on Amazon, snapped on the back of my phone, and I captured my wife's PIN at a grocery store in St. Louis. You can look at her PIN. Coldest was first. It is 4185. It's been changed, okay? So I'm forthright because I change a lot often. Typo squatting, ATD, aggregation through deception. This is where you get the robocallers calling your house. Hi, this is Jeff Muschick calling from the FBI here in Des Moines. We see some anomalous behavior on your account. Can you please validate it that you shopped at IKEA and Macy's and this and that? They just make stuff up. When they do that, they say, I'm sorry, to be able to proceed with this investigation and clear you of these charges, I need your name, social security number, address, CVC on the back of the card, AVS, address verification service. That's the zip code you punch in at the gas pump. You just gave them the keys of the kingdom. Okay, so the people in this room are probably pretty astute of what to share and what not to share. I'm going to tell you, my mom will share anything with anybody, anytime. She'll click on every link you send her. Okay, I'm there weekly trying to clean that machine because she views it as friends. My dad says, Dad, or Jeff, it was in a totally legitimate email. It had the Microsoft logo. Right-click, save as. Anybody can do that. So ATD is one form of an attack. Form jacking, those are just opportunities to just take over a form of any type. Could be a merchant where you're registering an account, could be signing up for a new credit card. That is where we go through automation. We've got ways, that's a big priority of MasterCard and a big priority of the criminals. From the criminals, they love automation from the sense of size, scale, and it's kind of a brute force attack, a surge of activity in a very short period of time, most often triggered between 11 and 11:30 on Tuesdays. Don't ask me why, okay? Getting into localized skimming, some of these images that you're seeing here are just kind of some live criminal events. That ATM in the upper left-hand corner, that is an ATM with a wireless router attached to it. So grab your pocket knife and cut that wire. POS overlays you see in the top middle, that's where it just snaps on top of the other one. It's going to capture both your skimming of your debit card, and it will also capture your PIN at the point of sale at the same time. So if you look very, very closely, the only difference is the font on the model number. Upper right is a PIN overlay. This is where they're essentially capturing that. There's a BTLE, Bluetooth Low Energy, that they will have a neighboring cell phone or something of that effect, that they will send that PIN to someone nearby. I have this image of a white van, that doesn't everybody. And then they are very quickly sending that to a Cardtronic 7600, and they're producing hotel room keys repurposed as debit cards. Oh God, here we go again, okay? The punch hole in the ATM, that is something called wiretapping, where they will go into that ATM, punch a hole, they'll grab that, they'll cut the wires, tether them in and out of a machine, and they will go through that in a basis of no cards involved. They just manipulated the machine to kick out $300 every 15 seconds until the machine's cashed out. So the balance of it, and the bottom middle one is just dumb. I mean, that's a camera where they're capturing your keystroke. But this is what goes on in our world, and we hear from either PFI organizations like a professional forensic investigation or things of significant scale. EMV has solved a lot of this stuff because if you don't know what goes on in an EMV chip, the credentials on each transaction change every time you dip it in that machine, okay? That's why it takes 7.1 seconds average round trip for a successful transaction, and it's basically repurposing the chip on your card and the chip on our network so we know that there's a unique match. In the event of a target breach, they could have only gotten one more transaction. That's why chip came around. These are going to be small numbers, so I'll advance to the summary, but we do look at this from a global perspective. Most notably, LAC in the bottom left, you're going to see a 92% acceptance rate and a 3 basis point fraud rate. This is pretty natural. I'll get to the summary in a second, but look at LAC in the bottom right-hand corner in terms of the acceptance rate. 62% of this is online. So on card not present in a MasterCard world is in-app. This is e-commerce based, and it's recurring payment based, stored credentials, okay? 62% of transactions are accepted in clean, and look at the fraud basis points, 58 versus 2 on the prior slide. This is what keeps us up at night. Again, from the physical world in summary, a 98% approval rate, digital world 83%. What's not on these slides, because our investors this isn't being recorded, is it? Hi. The investor day, well, we'll go on with it anyway. What's happening is in a POS world, there's a 1 to 2% fraud rate, and then you jump into the card not present world, there's a 5% fraud rate. Fast forward, look at the channels and the growth of the two sectors. Look at your own life. June 29, 2007, when the iPhone came out, everybody started shopping online. Apps came out all the time. My daughter needed new shin guards last night. Click, click, click. They'll be there tomorrow. That's life today, okay? We are doing everything we can to increase that digital acceptance rate, or when your card goes through clean, and reduce that fraud rate in that channel. The growth rate of the two respectively, the in-store channel's growing at 3 to 5% annually, and the e-commerce and in-app world is growing at 14 to 16%. I offer ranges in case you're reading this, that, and the other case study, because I look at them all. What's going on is kind of the old and new. I'll stick to the fraud trends at the top in the pink bar. What used to be a big problem was counterfeit. I just referenced repurposing hotel room keys, account data compromise, data breaches, okay? Data breaches are a big deal. Most of your personal information is all out there. I'll explain mine in a moment. But to give you perspective, the year of the Target breach, there were 8 data breaches. These are tier 1 data breaches, meaning the opportunity for you to have immediate utility with the data that was scrubbed to go out and shop right away, okay? 8 in 2015, 79 in 2016, 1,100 in 2017, and 1,800 last year. Uh-oh. So what are we going to do about that? Because you have to assume that your data is kind of out there, both from a PII perspective as well as payment credentials. Lost, stolen accounts are those are always going to trickle along. You see a lot of that through mail intercept fraud. When people were reissuing EMV, a lot of criminals were folding the mail like you all do at the mailbox, you know, make sure there's nothing important in there. And if you get into like a high-rise apartment building out in Manhattan, you're going to see opportunities where the mail's just sitting there instead of put in all the individual boxes. On the right-hand side, we referenced identity theft. ATOs and MTOs, that's a big deal. ATO is an account takeover where somebody else has your username and your password. So how do you validate that it is in fact you? And then we've already covered the growth in card not present. From the impersonation side and that ATO, MTO side. And ATO is where someone has your credentials. So how do we validate against that? We know your IP address. We know your screen resolution. We know your mouse speed. We know the clock drift, which is the deviation of your clock off of Greenwich World Standard Time in the bottom right-hand corner. You see hours and seconds. It goes down to milliseconds and nanoseconds. We track all of that because it has to remain constant. If you see that off, it's indication of an impersonation or an IP proxy. So those are just some examples in the digital world. We bought a company last year, about 15 months ago, called New Data Security. They get into behavioral biometrics on your phone. On your phone, we're tracking things like the gyroscopic tilt of your phone is directly in correlation to the quality of your eyes, the length of your arms, and your height. If my phone was in Brian's pocket, we would know that there's an anomalous gait pattern. Pretty crazy stuff, okay? We do that with a lot of devices. If anyone in here, I'm assuming majority have iPhones. If there's a few Androids, you can keep your hands down. But from that perspective, the day you set up your iPhone on Apple iTunes, we've already got you, because that's where it started, okay? So we know the IP address, we know the apps are coming on the phone, all the way down to some of the validation efforts. So we're doing these things also in different ways on the PC to look for what's normal or abnormal from a one-to-many, one-to-some, and a one-to-one basis. One-to-many is, does Jeff look like he lives in America, okay? Does Jeff look like an iPhone, whatever version you're using, and then is he performing like Jeff? We capture that behavior. We're tracking that behavior. When you go out to additional websites and stuff, if you see an IP address coming from, say, New York, but the zip code validation is Cincinnati and it's being shipped to Miami, that is a zip code triangulation fail, and we will have reason to boost scores up. So we've made a lot of investments in artificial intelligence. This is the biggest buzzword in the world. We laugh internally because we've been doing this since June of 2005, when we actually formed a relationship with the company that I represent now, one of the MasterCard entities named Brighterion. In this basis, we started out with one fraud model, and it was basically one model for the whole globe. It got moderate results. As things changed and became more card-focused, it expanded. We had 28 models that had product and regional specific undertones. In other words, an LAC debit model, a UK commercial card model. So we'd plug a product and a region. We got far more precise and accurate. Industry continued to migrate, breaches trickled across. We had to continue to innovate. By moving into AI, traveling the globe doing this, I can tell you this is a self-definition. It is the real-time aggregation, computation, and integration of data into your infrastructure or your DMP, your decision management tool, or what makes the ultimate decision. By aggregation, there's 175 data elements in an auth record when you swipe dip your card. Been here 15 years, when you dip your card, there's 175 credentials that come across in that. Very few parties see it. We see every element, okay? When that comes across, we have to look at the data that's explicit, that is in the auth, and then implicit data, which is we're going to go through on the data enhancement layer. What's not in the auth is how many times you've used that card over the previous 4 hours, 8 hours, 12 hours, 24 hours, 1 week, 1 month, 3, 6, 9, and 13-month variable. And we weight each of those based on the merchant ID and the category. If you see a daily purchase at American Airlines, that would look pretty crazy, right? Conversely, if you saw a 13-month velocity on iTunes with 2 teenage girls, it would show like thousands. Okay, that's all they do. So gathering that data, enhancing that data, computing that data, and then falling into the integration to make those, which is a laddered structure to make a decision. That's the big part of the AI side is, for example, one of our solutions, it comes across as a 3-digit indicator of a risk score and a 2-digit reason code. What's behind that is 109 child models. Some of the models' very purpose is to be an input to the forthcoming model, and it ladders down to that one aggregated output. From a real-time perspective, our attorneys don't let me call real time 150 milliseconds. That is our run rate internally, 66,900 transactions per second in 150 milliseconds. To put that into human terms, that's 1/3 of a blink. That's how quickly we need to pull all of your previous 13 months of behavior, classify it in all these different ways. Sophisticated term, I say, complete the muncha cruncha and produce the output. And we provide that to issuers, which is an indication of our, propensity model, if you will, of that given transaction. What's unique about AI is you've got data sources, we do not do external data appends or many other people that do, but you've got droves and droves of data that's out there. You look at that data on a grid, it doesn't tell you much. You focus on one entity of it, and what are you going to find? Applying a bunch of different technologies and being able to do that in a scalable fashion, we assemble an established baseline for a universe of data, and we only keep the attributes that kind of spawn off of that norm. That allows us to have significant data compression, to be able to do this and hold to our SLAs, to be able to hit these performance metrics. But keeping all the data, there's a bunch of dead wood in there. So what is statistically significant on a per user basis, that's all we keep. And that allows very, very efficient infrastructure. Going more into AI is the ability to personalize. I mentioned earlier, one-to-many, one-to-some, one-to-one. We keep the very specific attributes as stated back to what's unique to that given individual. The adaptive learning we'll cover in a forthcoming slide, and then being able to host the technologies with that ability to scale is essential because our growth we're averaging like 15 to 18% transaction volume growth annually, and more people are going card. I went to one of my kids' volleyball tournaments last weekend in DC. They didn't accept cash. I was like, this is awesome. Get my kids to college. But from that perspective, very few people carry cash. I mean, and some of my friends on these data breaches, they say, oh, I'm going back to cash. I'm like, okay, you lose your wallet. I can just walk down the hall and report a claim. Find my card, claim the fraud, it's not your problem. The bank will deal with it. They'll deal with the merchant. If it comes into an investigation, the banks are really good, okay? So good luck on carrying that cash, because if you lose it, it's gone. The flywheel effect in forms of adaptive learning gets into the input data and model development. We covered earlier the enrichment data, but the automated model generation is something that we have spent a lot of time innovating on. What we mean by that is dump in droves and droves of the data into a common platform, and we actually use AI to build AI. Okay, we use something called string matching and phonetic string matching that take like attributes of the data that we're seeing and put them in our fields. It takes us hours to do that. With a small bank in Long Island City, they provided us on a POC recently 13.1 billion records to do a POC. I mean, like billion records. So getting into that automated model generation standpoint, it's not just the parent, it's getting down into the child models, push forward too fast. Getting into the pattern recognition, confirmed outputs. This is going to get back into unstructured or structured learning. If you don't know the definitions of that, because these are just kind of nerd terms, structured learning is where you have a completely confirmed event. There's fraud on your card, you call the call center, they report it as fraud, it comes across to MasterCard. They're required by our franchise rule to report fraud and chargeback data to MasterCard within 90 days of that event. So we have a confirmed loop. So that's one side of it, and we will continue to roll and learn on that. It happens much faster than that too, because as events start to come across, if we see a fraud scheme in Indonesia, we can repurpose things. So if you're in Birmingham, Alabama, we will already be prepared from that on rebaselining the model of what that threat is. Getting into unstructured learning is things like money laundering. From a money laundering standpoint, you never really get confirmation that was it money laundering or not. Okay, you got 18 to 24 months sometimes when a SAR, a suspicious activity report, is sent in to be investigated. And as that comes back, it's 18 to 24 months later. Those fraudsters are long gone. So that's where you have to really get into what's a high propensity of that and look for more events of that, but you won't necessarily have a confirmed event. So getting into scalable and accurate. We mentioned the scale is 66,900 transactions and having equal focus on false positives. The false positives in our business are crucial because the going rate, maybe not this audience for people that travel frequently, but the average is 4.4 cards per wallet, okay? We want our card to be the top. If there's something called a false positive, I call them swipe and gripes, okay? Because that's what you do. You swipe your card, it doesn't work, you're pissed, you call in and you're irate. Now you have a attrition risk index score that can kick off. So things kind of waterfall downhill. So, but false positives, as the pressure on the fraud shops across the US have mounted, the capability and importance of those false positives have become more and more, because if the fraud guy is supposed to manage to one number, keep it under X basis points. But if the attacks are coming in at such a high number, to keep the fraud low, you're going to decline more genuine transactions. This is the balance beam of which way you fall. Things that also play into that are things like the bank's risk propensity, like how eager and growth-oriented are they, how customer service-oriented are they. There's many things that go into that. But lastly, I'll kind of close with a case study. And this is kind of demonstrating the value. If you take a look at the performance indicators from the legacy tools or the reddish bars, the AI performance is a particular product called Decision Intelligence that we launched about 2 years ago. We look at these under three primary categories: events, accounts, and the regional performance. So from a perspective of When I say the legacy tools that are out there, these are tools in our business named called Falcon, some are PRM, there's just a myriad of host systems that a lot of people use. We don't try to compete against them. We like BASF. We don't make blue jeans, we make them bluer, okay? What other inputs can we put into that DMP to perform more effectively? So from the basis of transactions or events, you'll see that we had an incremental performance of 15.8%. This is fraud they are reporting to MasterCard. And we caught that fraud plus 15.8% more by using AI technologies. From an account basis, an incremental 17% of the accounts that were impacted. And most importantly, on the VDR is a value detection rate. And that goes on the far right column, shows that of the fraud that they caught, we caught 23.6% more than that, which is a really difficult go-to-market business development message to say, hey, you guys are doing good, but you missed a lot. I mean, that doesn't make friends. What you can do is come in and say, we got tools, you got tools, let's do this, okay? So those numbers speak for themselves. Getting back to the focus on false positives, on the bottom left corner, it's called the event false positive rate. We look at things in score bands of severity up to 900. At 850 and above, legacy tools had a false positive rate of 16.1 or 16 to 1. What that basically means is for 16 detected fraud events, one's actually fraud. At that same metric, we were at 2 to 1. Okay? Next level down at score band 900, things are getting risky here. They have a 10 to 1 false positive, we're at 2 to 1, and at 950 and above, they're at 8 to 1, we're at 1 to 1. For every one we say is fraud, one results in fraud. That's a combination of dedication, tools, technologies, investment, collaboration. I can't stress that enough. We joked beforehand where we go to conferences and I was kind of slapped on the wrist because I had 3 banks at the same dinner table. Like, they all know each other, okay? Like, trust me, you know? That's where collaboration begins. We don't like to see Visa get impacted by fraud because we're next. This is the only facet of the payments industry where the brand on your lapel doesn't matter because you're after the common good. So, thank you.
All right, let's thank Brian and Jeff. And I don't know about you guys, but while Jeff was talking, I changed 4 bank accounts and they'll log into my my iPhone. We do have a few minutes for questions. If
I already
anybody
did it for you.
What's that? You already have it. We do have time for questions. There's a few folks walking around with microphones, so if you have a question, just raise your hand and they'll bring you a mic.
This is going back to something that Brian had mentioned, specifically with life insurance companies, with the State of Iowa Insurance Fraud Bureau. And we've been seeing an influx in cases, especially like you'd mentioned, involving the foreign death claims, in which the products that these people were focused on were those that were focused on simplicity, no face-to-face interaction, a lot of things that in hindsight and reviewing these across multiple companies, we're seeing tons of red flags that should have shown up in the underwriting process. What's being done by the companies that you work with to kind of keep up with the products as they change to this style?
It's a challenge because the direction companies are going is faster, quicker, more streamlined, and what you're talking about is more human touch, more oversight, and that doesn't seem to be the direction, which is one of my concerns. And maybe there's some carriers who can speak to specifics. But I know there's a lot of education happening within companies trying to train their underwriters to the extent that there is a human process to look for red flags. Internally, companies, they have multiple units, right? Actuaries are looking at pricing for fraud. SIUs are looking to catch fraud. Claims are looking for instances where their company shouldn't be paying this claim, and they try to interact the best they can, but they are separate units within most companies. So, the information seems to be there within a given company, but there's probably benefit by collaborating across companies as well to look for those flags. That's kind of a vague answer, I acknowledge that. One here.
Fascinating talks, thank you. I did want to follow up with Jeff on some of the credit card and some of the fraud that you talked about. There were a couple of slides that talked about the fraud rate when you showed the globe. It looked like Europe had much lower fraud rates and more approval rates. So I was just curious what drove that.
Yeah, 10 years ago, Europe moved to EMV, maybe more than that, moved to the EMV chip cards way before we did. Okay, they also launched something called chip and pin. So when you dip your card, you might be seeing this on your commercial cards, we have to enter in your pin. They did that universally across the board. So that is, if you have the card and you have the pin, you're kind of vested in that experience. So the approval rate's growing up, the validation elements are gonna go up. From a fraud perspective, if they do steal your card or you leave your purse outside and someone grabs it, they would have to have your pin. In the US, we tried to push chip and pin from a MasterCard perspective. Visa went the world of chip and signature. We had to modify our stance to say chip and choice, okay? And that's where things are progressing. But first in the US, we had to warm people up to the chip, much like you're doing right now on tap. Like Apple Pay, all the pays that are out there. This is the only region of the globe where mobile payments is not skyrocketing. You go to India, you go to Asia, et cetera, they are very comfortable using that phone, and we are actually sending in October of 2022, I believe, we will be using the same chip technology in a tap for the card, which is like a warm-up to get you to tap the phone. US is just different.
I had one more question, if there's time. So I know to win in this fraud race with the credit cards and things like that, it's going to require a lot of strategies. So educating consumers and making sure that they're building infrastructure, some of these digital interfaces in the right way.
Yeah.
You guys doing more predictive algorithms and alerting fraud. Also, the punitive part of these underworld kind of criminal organizations, is there a swell of activity to try to address the driver?
Yeah, there's two sides of it. From the identity side, there's a lot of lobbying. There's a lot of people that are trying to crack that nut on who's first in the race to say who's the identity provider of record, okay? With some of the technologies we have, we feel well positioned. We spend a lot of time lobbying in Washington, et cetera, to mainly lobby the responsible use of data. Because most people, like my neighbor Todd, he's like, I don't like what you do. I go, what are you doing? Okay, and he completely puts the odd in Todd, so leave him out. But from us, my 12-year-old told him that. From the basis of facial recognition, the proximity of where you're physically located, your behavior of the phone, et cetera, there's two sides of it. Is the daily use of it and then the origination of the account. So fraudsters are moving upstream. So when they're trying to originate a new account, is it Brian? Does it look like Brian, smell like Brian? Does it, identity providers, et cetera? What identity provider hasn't been breached yet? Okay, there's like 2 of 5. So from that perspective, who's doing this well in forming that kind of movement when you originate the account? The downstream effect is really going upward, but the origination side's tough.
Hi, I had a question for both of you. As you think about fraud as going into the future, what are you seeing as the biggest challenges analytically for actually improving your fraud models and so forth?
I got a short answer on that.
Go for it.
Finding talent. It's really, really difficult to find PhDs and data scientists, data modelers, algorithmic detections, econometricians, et cetera. Because when they do get very dangerous, they're also highly marketable. Our AI provider is based in San Francisco, and I mean, it's kind of a hot market for a data scientist, if you can think. So it's retention, it's getting the right people, training them up, keeping them, and keeping them inspired. That is a big, big problem for us to get. That goes beyond background checks, et cetera, et cetera. The other side of it is just continued innovation. If you're sitting on your hands and not continually, like that automated model generation thing I mentioned, didn't exist 18 months ago. So how do we get models produced refined, QA'd, and in production as fast as we can. Speed matters.
So my answer would be slightly different. And you look at the dollars involved in the payment fraud. So there's huge investments that you guys are applying to the problem of fraud because there's a lot of money at stake. Well, there's huge money at stake in insurance as well, but we're not applying nearly that type of sophistication because we can price for it, right? We can dial up the price of a product and the consumer ends up paying more. And that's an easy lever to pull as opposed to investing and committing to it. So commitment would be my short answer.
Mm-hmm.
Mary. And John Darwin is that individual that faked his death in England. Took me a minute.
Brian, you had mentioned before on the insurance side for the fraud that the underwriting fraud was one of the, at least perceived to be one of the bigger risks that we have. In order to do some of this fraud detection, especially on the front end, data is very critical to the process. We have regulations or pending or things that are coming that are likely to prevent insurance companies from actually accessing the same data that would help to prevent that fraud. You know, any advice or thoughts of what you're seeing for companies to be able to do a better job with that?
Yeah, so the privacy rules are going in the wrong direction for us to be able to apply data to the problem. You know, MIB's in a unique position where we've been around for over 100 years, and the New York Circular came out addressing, you know, their comfort level on certain types of data. MIB was explicitly identified as, that's the good stuff, don't worry about that. We're more worried about the non-FCRA or you know, odd purchase behavior. Is that actually adversely affecting a consumer? So that's not an answer, I know. But you know, we are in a position that we can collect data across companies and look for problems to the extent that companies are willing to address the problem or identify what the problem is. But for fraud, you know, we're more of a transactional-based company right now looking for it at time of underwriting. Maybe some more steps can be taken to aggregate across an industry and identify, you know, these are claims across many companies. What's the common denominator? How do we push out a product that helps them identify it sooner? So that's the best I can do.
Thank you, guys. Let's give them a round of applause one more time.
Nice job, sir.
Lunch is next. Lunch is back upstairs. It's in the room where the general sessions were, so feel free to make your way back to lunch. Thanks.